What's up everyone, it's Scotty with Money Vesting. So I hope you all are ready for what is to come in today's market open live stream here, because we are not looking super great. We are definitely selling off quite a bit pre-market here. Just give me 1 second while I get organized here. In the meantime, just give me a thumbs up if you guys can hear me and see me. Just want to make sure that everything is working well, and we should be all set to go here. So yeah, just let me know in the live chat, and we are all set. So QQQs here down a little bit over 1%. So we are down close to 1% at the moment. We've got the Dow Jones also selling off quite a bit, over 1% at the moment, and we got the S&P 500 or SPY is down a little bit over 1% as well. So all three indices or all three ETFs right now selling off pre-market. We've got the 10-year yields more or less flat, just a little bit over 3.7% right now. I loved what Marco mentioned earlier, therapy session inbound. That's what it kind of feels like right now, isn't it? Wow, you moved to right hand side corner. Oh, wait a minute, I gotta adjust that. I was actually recording, there we go, should be better now. I was actually recording lots of lectures and videos earlier, so I had a different format. So okay, I didn't realize that. There we go. Now we should be all good. So yeah, 10-year yields are at 3.7%. So they're just above 3.7%. There's been a lot of talk about the yields, the interest rates, the mortgage rates. I think that they're getting increasingly important in the markets, considering the where we are. We have seen some earnings revisions come through. I mean, some of the analysts have started to revise their earnings estimates. So I'll go over some of the updates here from pre-market. But if you take a look at some of the upgrades and downgrades first, JP Morgan reiterates Coinbase at neutral. They lowered the price target down to $60. We got Credit Suisse initiating Datadog as outperform. JP Morgan reiterates Qualcomm is overweight. Qualcomm, I think, is very appealing here at these levels. It's come down to a very strong support level, not from a technical standpoint, but also from a valuation standpoint. I think it starts to make a lot of sense at these levels. We got Goldman Sachs reiterating Costco as a buy. Morgan Stanley reiterates Tesla as overweight. JP Morgan reiterates Snap as underweight. We got Bank of America reiterating Meta as a buy. Morgan Stanley reiterates AMD as overweight. AMD obviously has been selling off quite a bit, Advanced Micro Devices. God knows for what reason, but this is another stock that's I think is very, very attractive at these levels. Morgan Stanley reiterates Apple as overweight. We got Goldman Sachs cutting their year-end S&P 500 target down to 3,600. Sees it falling even further in a hard landing. So following the latest Federal Reserve meeting and interest rate hike, Goldman Sachs sees a higher path of rates going forward that will weigh on stocks through the end of the year. And the firm on Thursday slashed its year-end target on the S&P 500 to 3,600 from 4,300. So that's a big downgrade there, about a 700-point downgrade. And the current target implies the index will fall more than 4% through the end of the year from Thursday's close. And Goldman's new target for stocks takes into account the Fed's aggressive interest rate hikes to tame inflation and will probably push the U.S. economy into a recession next year. And the bank now sees the Fed tightening another 75 basis points in November, and then half a point in December, and 1/4 point in February. Real rates. So equity valuations have also closely tracked real interest rates until recently, but the narrowing gap between the two is cause for concern, creating a vulnerable backdrop for equities. So Goldman said real yields have jumped to 1.3% from 0.4% this year. So again, as interest rates continue to go higher, when adjusted for inflation, real rates are continuing to push higher, and they're kind of competing against the S&P 500. Everything, all asset classes right now are competing against each other. That's what's happening. They're all asset class. You talk about real estate, you talk about stocks, you talk about the bond market, commodities, cryptos. Everything is fighting against the higher interest rate backdrop, and investors are going to go wherever they get the most yield. And if they can get the risk-free rate, which is the bond yields, if they can get those for practically no risk, guess where they're going to go? They're going to go to those bond yields, right? So of course, everything is kind of fighting against the higher interest rate backdrop. So for context, real yields were negative 1% at the start of this year, when the S&P 500 hit an all-time high of 4,800, traded at about a 21 PE. The tightest yield gap between equities and rates since the pandemic further tilts the balance of risks to the downside. So now we're starting to get a little bit of some conversations about earnings per share. I think this is the time, as October earnings season is right around the corner. In about a few weeks, we'll start getting those earnings once again. New earnings season, Q3. Goldman also lowered its estimate for 2023 on the S&P 500 earnings per share to $234. Which represents a modest 3% growth. That is below the consensus of $241, which I still think it's a little bit higher across the board, and we need to account for those earnings revisions, because if Goldman is starting off with an earnings revision as other companies, other banks continue to do that, well, guess what? All of a sudden, you've got a very, very high multiple on the S&P, and that leads to more potential downside, unfortunately, for the S&P. And they forecast the S&P 500 will fall even further down to 3150 if there is a hard landing scenario feared by its clients, where the Fed tips the economy into a recession and if the earnings actually do take a big hit. So that's going to be their worst case target. Now, amidst all of this brutality in the markets, all of this selling pressure, all of the hard landing, the negative sentiment, the bear sentiment, there's one person staying strong. There's one person just cheering a big bull market, and this is a news that would absolutely be a no shocker, absolutely should not surprise anybody. If anybody can guess who we're talking about and what we're talking about, take your best shot. But it's just a lone soldier standing by themselves, expecting a big yes, Oscar got it, Tom Lee. Tom Lee still thinks that we can rally into the year end, and here's why. So yes, it is Tom Lee. You guys all got it. So FundStrat's Tom Lee isn't ruling out the possibility that equities will rally into the year end, even after a tough few weeks for the stock market. So the major indexes were down Thursday, a day after selling off following the Federal Reserve's latest rate hike. But he does expect that we are positioned pretty well into the year end. And his current price target for the S&P 500 is still 4,800. 4,800 in the year end. We've only got about 3 months left, and that is going to be a 27% upside potential. And I think the basis of his thesis is that we will see inflation trend down as we kind of head into Q4. So yeah, I think that's the basis of his thesis there, that inflation will start to trend down, and that will be some of the leading indicators are showing signs of pulling back from an inflation standpoint, according to Tom Lee. So, and yes, our friend in the chat, Oleg, yes, he's also very bullish. I agree. Yep. So, but anyway, so a lot of things, are moving. Obviously, mortgage rates, the 30-year mortgages are now almost at 6.3%, 15 years are at 5.4%. The 10-year yields obviously have pushed up quite a bit. The bond market in general, the yields have moved up quite a bit. Volatility here is up 4.2%. It has been a little bit muted, I would say, all of September. It hasn't really moved all that much. I mean, since the beginning of September, we have traded sideways for the most part. It's been a little bit back and forth, but nothing too crazy. So, you just have about a few more days left in the month of September. So we'll see if we actually do indeed getting up that spike here that we were anticipating above 30, 35 levels. But if not, it's just been really muted all of September. Oil prices, look at that plunge. Look at that drop here. This is interesting. This is exciting. This is exactly what we were looking for, right? So big rejection for crude oil right here. So this right here was a big resistance that we were, watching and anticipating. We got that resistance there, and then a massive breakdown, sub $80 per barrel in just a matter of the last 8 hours. We have seen oil prices pretty much plummet a little bit over 4.5%, almost 5%. So energy is going to absolutely get crushed, in my opinion, today. We got Chevron down over 3.5%. We got Occidental down over 4%, back under $60. And just from a few weeks ago, Occidental is down a little bit over 24%. We got Devon Energy down over 4.7%. And you will start to see more and more demand destruction for crude oil. If, of course, the Fed continues to put us into a recession, right? If they continue to raise rates, and if there's a self-induced recession in 2023, there will be significant demand destruction, because I do strongly agree with what Ray Dalio mentioned in the in the Market Watch Money Festival. And he mentioned that delinquencies are higher, and you are kind of seeing the early signs of what would be a potential recession in 2023, 2024. And that is because people are now dipping into their savings to actually pay for their necessities and their bills and whatnot. Credit card debt, obviously at much higher levels. So after a certain point, I feel like people are going to realize that enough is enough. We can't really afford to pay such high prices for energy, and there's going to be a significant demand destruction. But that's really good that crude oil is definitely coming down. But on the flip side, we do have the dollar index at 112 now. So it is up 69 basis points. So it's pushing up to 112. So if one thing is benefiting, if the crude oil prices are coming down, it's good for inflation. But at the same time, from a trade balance standpoint, from just a earnings standpoint, on a foreign exchange basis, adjusted basis, we got the dollar index now at new heights at 112.352 was the high for the day, and it's up another 70 basis points. So yeah, lots of interesting things moving in different directions. Bitcoin here at the moment is just consolidating at 19,000. So again, it pretty much found a support at around 18,000, so inside this green rectangle. And Ethereum right now also just consolidating sideways around $1,280s to $1,300 right now. So that's the complete update here on the markets right now. So Rose says, Caddy, do you think it makes sense to deploy any cash given what Dalio said? I think it all comes down to now it's going to be a pretty much a scenario-based analysis, right? We're just going to have to wait and understand how aggressive the Fed is going to be, like where interest rates are going to go. I'm actually going to be taking Ray Dalio at face value and saying that, okay, inflation is actually going to come down to 4 to 5%, because that's what he predicts. That's what he says, that inflation will come down to 4 and 5% by next year, in the coming few years is what he mentioned. So he said that, we're going to see a big hump and then a right back down to more stable levels. 4 and 5% is actually, obviously it's much better than 9 to 10%. It's obviously a lot better, but still from historical measures and from where the Fed's target is, it's still pretty elevated. So at 4.5, close to 5%, I'm going to be interested to learn more about what the Federal Reserve is going to do at those levels. Are they going to keep rates at 4.5, 5% to keep the real rates neutral at 0? Or if they're going to increase rates to 6%, 7%, is that even a possibility, just considering where inflation could be in the months to come? So it all becomes a scenario-based analysis where interest rates are versus where inflation is, and then you got to estimate how that's going to all play into the earnings, and then at the end where earnings could potentially get revised down to, and what would be that S&P 500's value based on a multiple. So as a general rule of thumb, the target that I'm actually paying attention to, that's kind of pricing in all these worst case scenarios. That's pretty much the worst case. Like, the absolute worst is 3,000, right? So 3,200 is a level, but 3,000 would be that next, because at that point, you're pretty much pricing in 15 times forward earnings on a $200 EPS. That's pricing in both an earnings revision and a very significant multiple compression, and that gives us a 3,000. So that's just a general rule of thumb. If you don't want to go through the research of analyzing everything, just that would be like the worst case scenario. But of course, we've got 3,500, we've got 3,200, we've got a lot of levels to kind of break through before we even get there. But it really depends on the severity of the recession and how different scenarios can play through into the market. So again, there's no right or wrong answer. It's just it's going to depend on a lot of different things. So that's where we are. So life forms, are the USA not benefiting on higher price in the dollar? So not necessarily. Yes, a strengthening dollar can be seen as something that's good. Sure, from a travel tourism standpoint, that's great news. I mean, people have higher buying power outside of the US. But when you take a look at the trade balance when it comes to imports and exports, that's actually hurting the US. So, in Q1, we learned about the GDP, which was negative. In Q2, that was also revised down pretty substantially, and we saw very, very modest growth. And Q3, it's also been revised down to only 0.6, 0.4%. Not to mention that, the Federal Reserve released their SEP, they're expecting only 0.2, 0.4%. And Jerome Powell even himself cited that foreign exchange issues are going to be affecting the trade balance, which again, the imports, exports, if the country continues to import more than what they export, then of course they're going to have a potentially negative trade balance. In other words, a trade deficit. So what that does is that obviously affects the GDP as a whole. And that could potentially increase conversations about a recession in the US. And not only that, of course, some of the larger corporations, larger companies in the US, such as Amazon, Apple, Microsoft, I mean, all these companies have operations all around the world. So, if the US dollar is strengthening, guess what's weakening? Emerging market currencies, right? Indian rupees and, all these other Asian countries that are weakening against the dollar, and even the euro and the UK pound. The sterling pound, I think, hit a new decade low, was it? I think it came down to like 1.11 against the US dollar. So once those earnings are kind of translated back to US dollars, they're a lot lower because those currencies have fallen off a cliff against the US dollar. So on a foreign exchange adjusted basis, of course, those companies do get affected. Some of the more global companies. So let's see here. Let's see. AMD under $70. Yes, AMD definitely selling off quite a bit. I am going to get assigned on one of my puts here at closer to $72, $74 per share. So like right at the support. So this right here would be that support level where that put will get exercised. And the other one that I have is at $60 strike. So that one is still ways away. Well, not at this rate. AMD keeps sliding lower. So $8 away from that strike put, and that will get my cost basis down to sub $60, closer to 58 bucks. So if you kind of average those two prices out, 72 plus 58, I will be sitting at around 130. Actually, let me see. Around $65 for the new position that I've started. So yeah, that would be, if I were to get a sign on that $60 put as well, I would be sitting at around $65 on average. Around call it $70 because I do have other shares as well. So that would be my cost base. Then I'll consider dollar cost average at lower levels because I think this is ridiculous. I mean, for advanced micro devices, for Nvidia, I understand because the valuation was already a little bit rich. It was trading at 14, 15 times sales or 40, 50 times earnings. But in AMD, I just, I can't understand how it can be trading at under $70 right now. But this is the market we're in, and that's the whole idea, right? Just because the stock price is falling doesn't necessarily mean it's a terrible company, right? And that, I think, is something that we need to understand, that just because the price itself continues to go down doesn't make the company itself bad investment or something that's not worth investing in. Because I feel like Meta has gotten its fair share of criticism in that area where the technicals have been really, really weak, and people have pretty much said that the company is done. If that were the logic, if that logic were to be applied across the board, then there might be many companies that might be done, quote unquote. But I think we can all agree that Nvidia, AMD are good companies. They have a lot of potential, but just because the stock price is coming down doesn't necessarily make them terrible companies. Ash says Nvidia is even worse. So NVD, did you mean Nvidia or NVD? Yeah, so Nvidia, just from a valuation standpoint, absolutely agree. I think it's definitely a lot worse. Yeah, so NASDAQ, let's talk about our chart of the day. So implied open is going to be around, I want to say 10,000. So right now we are down. Let's take a look. So QQQ is down about 81 basis points. So our implied open today is going to be around 10,974. So is that right? 10,000. Yeah, 10,974. Okay, so we're going to be opening right underneath our 200 simple moving average. So we'll see. I mean, we'll see if the buyers can actually step in to push us back over those levels. At closer to 11,100. So we'll see if the 200 SMA, if you close above or below that level, could be very volatile. Could be a big battle day between the bulls and the bears because it's the close of the week. And of course, we're at a big support level here. So yeah, that's where we are. So Marco, Nvidia volume shelf support. Yeah, it's starting to kind of break below that level. Just considering where we are, I think we're at closer to 123s now. So we are expected to open below that 200 SMA, and I believe below that volume shelf as well. So yeah, so we're definitely expected to open below. So what happened last week, or actually this week, Nvidia had such a volatile trading session, right? I mean, it pretty much rallied all the way up to that target. So again, going back to the 30-minute time frame, you'll notice that we actually made it all the way up to 140. almost filled that gap in. And then, of course, after the Fed speech, quickly reversed right back down and starting to break down even further from this support level at 125. So it was really, you had to be paying attention to Nvidia if you were trading this from last weekend's video, because it consolidated so much and then it ended up rallying over 7.5%, almost 8% before the Fed, of course, and then started to sell right back down. So Tesla we haven't discussed. Let's take a look at Tesla here very quickly. So Tesla also fighting a big resistance, right, at 200 and what was it, 315, right? So 315 was a big level inside this red rectangle. So we're still kind of fighting that level. We're not able to successfully break out. It's down almost 2% pre-market. I'm going to open up our charts so we can get a good understanding on some individual stocks here. So, all right, Apple here down about 1.2%. We got Nvidia down over 1.6%. AMD also down over 2%, and Tesla down almost 2% as well. So, and yeah, Tesla, next support really is going to be in the 250s. Kind of like the next technical support. We do have some buyers previously stepped in at 266, so we could have some potential support there, but a much proper demand area, much proper support would be in the 250s. For Tesla. David says Meta was positive yesterday on a pretty big red day. Could be a sign. Yeah, I mean, it does that sometimes, but then it would be very, very red on a very green day, right? So it throws you off sometimes. So I necessarily wouldn't go off of, what Meta, Google, Microsoft did on a day like yesterday, because I think all of them are down pre-market. So Meta's down 1.3%, Google's down about 0.5%. Google and Microsoft all hitting a new 52-week low. And this is something that we talked about in our previous live streams, right? You've got all the big tech names, with the exception of Apple and Tesla and Amazon. You've got AMD, Nvidia, you've got Meta, Google, Microsoft, all of them hitting a new 52-week low. That is, that just goes to show how much sentiment is really, really weak, how weak the sentiment is. And they haven't made any progress in the last, I want to say, like 6 months or so. I mean, at least Apple, Tesla, they've kind of pushed higher a little bit. Even Amazon, to some extent, has pushed higher, and it hasn't really come down to the same lows from back in June. But Google, Microsoft, Meta, Nvidia, AMD, just like no progress at all. I mean, yesterday was the lowest day in the last 52 weeks. It's crazy. Yeah, and a lot of number of stocks. I mean, Howard says a number of big stocks at 50-week lows. So that's definitely been across the board for a lot of companies. So Matt Money says, Jay Powell speaks today. You think it'll run up until he speaks? So he doesn't necessarily speak. I think it's only a 5-minute opening remark. Correct me if I'm wrong, but I think it's only a 5-minute opening remark at the Fed Listens conference. So I doubt that's going to be relevant today. So I don't think it's going to be that important. All right, so the NASDAQ, let's see where we open and let's see where we close, because we got the 200 SMA there. Nvidia getting a big spike back up to 124 right now. So Steve says market will bear rally after June 16th lows. Lots of people watching the VIX going to 40. Yeah, I mean, if VIX gets to 35 or 40 levels, I mean, anything inside this green rectangle, I will take it. I will absolutely take it if the VIX gets up to 35 and 40 levels. I think that is really what I'm paying attention to. All right, so Nvidia here, opening down 70 basis points at just under 125. Tesla just at over 284 right now. AMD still down 2%. Apple still down 1%. Let's see where we open. NASDAQ here, 10,946. Remember, we just need to cross 50 points in order to get back above that 200 SMA to at least be able to show face to the bears. Pretty much. So 10,095 is going to be that 200 simple moving average right now. And then we got the S&P here down about 1%, just trading over to 3,700. And then finally, we've got the Dow down over almost 300 points at the moment. So not June lows yet. Next week is historically worst of the year. Yeah, so last 10 days for September are seasonality-wise over the last 100 years has been the worst time during the worst month. So last 10 days is, we pretty much started out on the 20th. But of course, next week is going to be pretty much down to the last week of pretty much the worst month. So let's see here. Let's see. Sarm says, so where is the money flowing to? That's a great question. I would assume a little bit of emerging markets as well. But yeah, I mean, you've got all asset classes selling off. I mean, real estate is the only one that's kind of held up in 2022. I mean, prices are still up from, at the beginning of this year. But with the mortgage rates as high as they are and how quickly they're going higher, I doubt that that's going to continue. I watched your Ray Dalio video. If you believe in his prediction, nothing much good stock price is concerned. What will happen until 2024? What is your personal opinion? So Alex, great question. I think considering what Ray Dalio had to mention, I think it all comes down to how severe the recession is going to be. Because in that interview, I don't know how many of you actually watched it, when asked the question, how severe or how long that recession is going to be, he pretty much had no answer, because again, he mentioned that it's a scenario-based question, right? It depends on a lot of different variables. So whether if you understand inflation is going to be at 4.5%, 5% by next year, if you understand interest rates are going to be at 4 or 5% by next year, how is that going to affect the U.S. economy and unemployment? That is still unknown, right? We know some things about inflation and interest rates. I mean, we can make a reasonable prediction that, okay, inflation 12 months from now will be back 4 or 5%. Interest rates will be at 4 or 5% next year. But we still don't know how that is going to affect unemployment and economic growth. It would slow down, absolutely. Unemployment will be higher. I can almost tell you right now that I do think that unemployment will be higher, but to what extent? It's just like on a scale of how severe it will be, we don't know. So, and then of course that will affect earnings. All comes down to earnings. All of it ties back down to how earnings are going to do. So Tesla here, down 2%, just trading under 283. So Rose says, do you think the rate hikes are high enough? What happens if we get to no progress next CPI report? So, as I've mentioned before, this idea that the rate hikes and whatnot, the Federal Reserve unfortunately is doing the only thing they can do right now is to raise rates, right? I've already mentioned that inflation needs to come from both the fiscal policy and monetary policy. It needs to be the dual mandate for pretty much both fiscal policy and monetary policy, because even Ray mentioned, like in that report, was that if we continue to create this debt, if the amount of debt continues to go higher, and if we continue to spend more money on these bills and these different bills that are getting passed, that's not helping the situation in itself, right? Doesn't matter how much the Fed continues to choke demand and raise rates, it's not going to help the demand side. It's not going to help the supply side of the equation. So the one thing that I think needs to happen is that interest rates need to get positive on a real basis. Right now they're still negative. I mean, the Fed funds rate is still below core inflation and headline inflation. Once we get to positive real rates, then I will feel a lot more confident that, okay, it will make an impact. It will actually put a dent on inflation over the long term. But eventually, it all comes down to how much economic pain we actually get, because at the end, the Fed's goal is for economic pain to be greater than inflation pain, and eventually for people to inherently stop spending, and as a result, inflation will be back down. That's at least the expectation. Let's take a look. So, Caddy, can you check calendar? Any events near days? Swapnil, so let's see. What do we have? I don't think we have anything on our calendar at the moment. So let's see. September 2022 calendar. I don't think we have anything left. What do we have? So yeah, we just got done with the Fed meeting. Costco, FedEx, those were the earnings. Today is the 23rd, right? Yeah, today's the 23rd. So nothing today. And then we have some quarterly options expiration, and we pretty much have the end of Q3. So that's all we have for next week. We have a few companies reporting, so Nike, Carnival, Micron, Paychex, some earnings coming up, and then it's just the quarterly options expiration and the end of Q3. So this might be important. This actually might be important for the markets, because it's the end of Q3 and there might be a little bit of rebalancing taking place among hedge funds and professional money managers and whatnot. So that could create some more volatility going into next week as well. So those are the only three things that I have: some earnings and then the end of the quarter and quarterly options expiring. All right, so markets here. The Dow continues to slide. I think it's happening because of the backdrop on Chevron, and oil prices, energy prices are selling off quite a bit. So Dow 30, we have Chevron kind of leading the way, down almost 4%. Then we've got Caterpillar down 2.5%, Boeing down 2%. All 30 stocks are down except for Home Depot. So 29 of the 30 stocks in the Dow are selling off. Home Depot is the only one which is up 40 basis points at the moment. So Tesla down to 280, Amazon down to 115, AMD down to $68. So yeah, we got WTI crude fell below $80 for the first time since January, as central banks around the world step up their fight against inflation at the cost of growth. And I think now year to date, we have crude oil actually negative. So this might actually, wow, look at that drop, 5%. Incredible, absolutely incredible. On the flip side, this is the one good thing happening in the market. Apart from all equities dropping, I think this is the one good thing that we can actually look at today, and it can help inflation in the future. But of course, other things need to improve as well. One thing that Jerome Powell mentioned in the FOMC meeting, which is about a third of inflation, and he mentioned that it's not coming down anytime soon, and that is shelter prices. Shelter, in other words, shelter and rents. That, unfortunately, he mentioned is not expected to come down anytime soon. And if it doesn't, well, then your core inflation is going to stay higher, because core does not include for energy or food, but it does include for shelter. So Christian, and he puts Scotty. So looking at a few stocks, already have quite a few puts, but looking at Google, Amazon, some of them, Tesla, if it continues to sell off, might be interested in that one as well. But of course at lower prices, so we'd be looking at like sub $200 strikes. So let's just run through our entire watch list. Not that there's anything green. Fubo TV is pushing higher on an upgrade today. So it actually got an upgrade from, I think it was Bank of America. I'm pretty sure it was Bank of America. I forgot which bank it was, but I'm pretty sure it was Bank of America. But anyway, up over 4%. We got Roku pushing up 1.2%. Upstart, it's hitting a new 52-week low, but pretty much inside this support right now, just hanging on at $20 at the moment. And of course, everything else is a straight up red. Everything just down anywhere between 1 to as much as 4, 5, 6, 7%. With Zim integrated shipping, down over 4.5, almost 5% right now. So this stock also getting destroyed at the moment. We got TrueLeave also down 4%. Marathon's been selling off as Bitcoin continues to slide lower. Neo down 4%. Biotech, so XBI also selling off quite a bit, 4%. So very aggressive move to the downside. And we got Take-Two Interactive down 3%. Enphase cooling off a little bit. And InMode is also down 2.5% on the day. And of course, big tech, large cap, everything is down. It doesn't look like NASDAQ's going to find momentum. It could. The day's only just started. But really, it depends, whether we can close above that 200 simple moving average or not on the weekly moving average. And oil continues to slide to $78 now. Wow. Incredible. I'm just going to keep the chart here so that we can actually look at something that is going to be good and positive for the markets over the long term, not just look at the NASDAQ. But let's just take a look at our polls. Where are we sitting? So yeah, about a third of people expect the markets to be red, so make sure that you do vote. But 68% expecting the markets to be down, and then of course 27% expecting the markets to be green at the moment. So pretty much in line with where the markets are. Steve says, Caddy, thanks for doing that video on Zim the other week. I got out at the right time before it tanked to $24. Yeah, I mean, Zim, definitely pay close attention to the freight rates. Like I said, in the short term, medium term, the company might still post some decent numbers. But again, the market's not looking for short term, medium term. It's also forward looking in terms of what the earnings are going to be next year and the year to follow with that. So you already see the quarter over quarter earnings kind of declining significantly. Margins are coming down, revenues are coming down. So it's not a surprise we're seeing a pretty significant pullback here. All right, S&P 500. The next fib level really is going to be 3,500. We're almost at our June lows. June 13th is going to be that level that we need to watch, which was at 36.35. So we're like about 70 points away. Another 70 points and we would have cracked our June lows to come right back down. And 3,500. We've also got the 200 SMA at 3,585. So call it 3,500 to 3,600. So that 100-point buffer there is going to be that support, because I've also got a fib level here at 3,509, which is a previous resistance for the S&P. So Kevin says, I'll be buying today. That's great. Let us know in the Discord, Kevin, what is piquing your interest at the moment. Alex says, I just got 11 stocks at 52-week lows. That's incredible. That's good. And yeah, if there are stocks that are coming down to your buy targets, by all means, that's your plan, if that's your long-term plan, and you're coming down to very, very attractive levels and your buy targets. And as we always say on the channel, is let the price come to you, never chase. Right now prices are coming to you. They are coming to better and better levels. And in essence, they're all de-risking. They're all de-risking at the same time. Okay, as prices come down, risk comes down significantly. And this was something that I think Ray Dalio also mentioned in his the interview. He said a lot of people make the mistake of actually buying when the stock price is going up, right? So they end up being very, very expensive, and they end up overpaying for those stocks. And right now, a lot of them are actually coming down, so it's good deals. Good deals. Of course, not for all, but we have to be very selective. So I agree. I think AMD is definitely one. AMD is absolutely, no doubt. And then looking at our other charts that we had, let's see, where are they? There we go. So QQQs broke down below 280. There was a big support there. One of our other members, Ranjit, and I, we were talking about 280 as a very, very critical area of support. We kind of broke down below that level today with a huge gap down. And the next technical support is going to be around 269, 270 levels. Just considering where we have validated previous support. We may find some validation, I want to say, at 275, just because the past 30-minute time frame seen some bounces here, but a much better level, again, that June 16th low is going to be 269, 270s for QQQs. And then going over to SPYs, again, big breakdown here below $371. So just been on a consistent decline here. Of course, the next support is going to be that June 16th low at roughly around 362. So that would be the next level in case we don't successfully break out above 371 back higher. Seems to be holding. Yeah, market seems to be kind of, well, not quite. We just hit a new day low. Yeah, Avi says many stocks are at 52-week lows and we are not even in June lows. And that is because there's 3 companies that have not yet hit new 52-week lows, right? The ones that I mentioned. There's Apple, Tesla, Amazon, right? Those are 3 companies that have been kind of holding up the market if you think about it, right? Those 3, I mean, Apple's, over $2.5 trillion market cap. Tesla makes up almost, $800 billion right now, considering that it's sold off quite a bit, but what is the market cap for Tesla? $870 billion, so that's another almost $1 trillion. And then of course you got Amazon, another $1 trillion company. So you got $4 trillion right there, which is just holding the markets higher. So if those actually start dropping, Tesla this week is down over 8%. Apple this week is down only 24 basis points. Apple's done actually really well. So Apple is the key here as well. If Apple really was down 4 or 5%, we would have been easily, without a doubt, if Apple was down 4% this week, we would have easily breached the June lows, no doubt. Amazon's down 7.6%. So it's really come down to Apple. Apple's really held up, in this market sell-off, and we're still far away from those June lows. So yeah, Sandeep says everybody is hiding in Apple, and that was their one day, right? That one day this week where everything was red, but Apple alone was green. It was up 2%. So it kind of has become this safe haven stock where everybody just wants to own Apple, and just like until all this uncertainty kind of stabilizes, until all of this kind of gets resolved, everybody just wants to hide out in Apple. And that's why it was just like one of those days when it was pushing higher. And this week, I'm surprised it's only down 0.24%. This is crazy, when the entire markets have just been sold off. So yes, Oscar, my buy target on Google was sub 100. It's closer to $92. So if you take a look at that spreadsheet, that Google spreadsheet, it'll show you the fair value is closer to $92. Yeah, Apple needs to capitulate, Rose says. Well, I do think the valuation is still a little bit high, but Apple's always been able to justify its high valuation somehow. Even if we expect the earnings growth to kind of slow down a little bit, Apple's always been able to demand a much higher price to earnings, price to sales multiple. I mean, if you take a look at historical measures here, let me just see if I can bring up the spreadsheet for Apple. Again, we've talked about this. It might be a little bit repetitive to some people, but for all the new viewers, you can get a good understanding of what we're talking about. But what we're really saying here is that Apple's valuation over the last however many years this analysis goes back to, 14 years, right now as it stands, it's trading at around 23, 24 times earnings and about 6 to 6.2 times sales, which, looking at historical measures, the orange bar is going to be the price for free cash flow, the gray is going to be price to earnings, and blue is going to be price to sales. So even though we have kind of leveled off a little bit, so Apple definitely is not trading at that insane value where it was back in 2020. It has come down over the last couple of years here. It's still, from a historical measure, a little bit higher. So in the past, Apple has traded about 20 times earnings, give or take about 23, I would say, 20 to 23. In 2009, and then of course in these years it was a lot lower. It was actually under 16, 17 times earnings, and price to sales has been a lot lower. It's been like under 5. It's been under 5 for most of the times. Only in the last 3 years, Apple's price to sales was over 7, or in 2020 it was actually over 8. So yeah, very expensive stock, in other words. So Harsha, why aren't bank stocks banking on higher interest rates? Well, they do benefit on the interest rate side. I was just looking at different banks and their website and what they're charging for student loans and mortgage rates and all that. I mean, they have quickly adjusted to the higher interest rates, so I'm sure they're making a ton of money on that net interest margin. However, there's a high probability now that we go into a recession. So if there's a recession, well, spending in general will pretty much cool off, and people will not be looking at that new home or refinancing a home or buying a new car or spending on credit. All those things will just go away during a recession. So even though higher interest rates might be good theoretically for the banks, but practically speaking, if there's a recession, it's not going to be great for the banks. Swapnil says, hi Caddy, I want to take a minute and tell you thank you very much for your live sessions. It helps me to understand and take market related decisions. Appreciate that, Swapnil. I'm glad you enjoy these live streams, and yeah, thank you. So NASDAQ here coming down to 10,800. The market really doesn't want to own equities at the moment. It's just kind of feels like, exit type of day for equities a little bit. Jonas, AMD at 68, isn't it a good deal? I think so. I personally think so, yes. I think their growth is still pretty intact. I think nothing's really changed. I mean, Lisa Su has pretty much reiterated 60% growth for 2022. And I'm curious to see what their 2023 growth is going to look like, considering that they have the most visibility, in my opinion, in the chip sector. But at the same time, interest rates are going to be much higher. So, we also talked about another thing, which was if you come over to FactSet, and you take a look at how many companies pretty much mentioned recession in their earnings call, it was the highest since 2010. And you don't see that happen very often because, and the reason is because, managers, executives, the C-suite, they have a very good visibility into demand. They literally have very good visibility in what their demand is going to be for at least next 2 to 3 quarters. And if they're actually citing recession as a pretty big concern, then there's a high probability that we see that. Because, last time we actually saw this number spike was back in first quarter of 2020. And, we pretty much had a recession around that time. So this is a very good chart of the number of S&P 500 companies citing inflation, supply chain, and recession on the earnings call. This was as of second quarter. And what you'll see over here is the blue line is the supply chain word, quote unquote supply chain. The green is inflation. And the black line is recession, like companies actually mentioning the word recession in their earnings call. And you'll notice a huge spike in the last couple of quarters, especially in the second quarter. This number jumped up to 225 companies. That's 500 companies, 225. That's almost 50%, almost half the companies citing recession in their second quarter earnings. I'm going to be curious to see where this number ends up in the third quarter. I wouldn't be surprised if more than 300 companies mention recession in their earnings call, considering that those fears are very well elevated. And you'll notice that supply chains have kind of leveled off, so supply chains have come down, but inflation is still pretty elevated. Inflation is still at the top of their mind for over 400 companies. 400 over 500 companies. That's what, 80%? Yeah, that's 80% of companies mentioning inflation in their earnings calls. So, Tesla hitting 265 today. Let's take a look. So 275 is where we are right now, down over 4.4%. So definitely selling off quite a bit. Who thinks here that we're going to come down to my final fair value of sub $200? Let me see. Let me see who here actually believes that I'm finally going to be able to buy some Tesla shares. Dollar cost average at sub $200. Pull it. All right, let's just pull it. Let's just see what everybody thinks here. All right, so Tesla lowest. What should we do? Lowest price it gets down to. Okay, so we'll do 250, or we'll just do 275. We'll do 250. We'll do less than 200, and then we'll do less than 150. So really, the options are 275 or higher. Then we've got 250 or lower, and then less than 200. So hopefully this is clear enough for everybody. So Tesla lowest price it gets down to, whether it's going to be 275 as the lowest price, or 250, or is it going to come down to 200, or is it going to come down to under 150? Let's see here. Let's see where the polls are at. Let's see how many real bulls and bears we got for Tesla. Steve says you're dreaming if Tesla goes to 200. Man, there's no harm dreaming, Steve. I can dream for good and better deals for Tesla. I can dream I own Tesla at a couple dollars, It's a great company. Who doesn't want to have it? So Oscar, if you were starting a portfolio today, what 5 stocks would you buy? That's a great question. Oscar. I would pick up AMD personally. Google, I would start with. Meta, I would pick up. And those are the 3. And then I would be looking at, actually, let me see. Visa is actually breaking down. I would be interested in Visa in the low 160s though. Adobe here. I would actually consider Adobe as well, but closer to 260s for Adobe. But those 3 that I just mentioned, absolutely. Amazon, I could, but again, it's at 115 right now, low 100s. But again, long term, a few dollars here and there doesn't really matter. But yeah, so those 4 pretty much I would consider at the moment. And then Qualcomm. Qualcomm is another one that is very strong here. I mean, it's got a very strong support. It's come down to that same level, valuation's low, and it's got a pretty good yield, 2.4%. You can't complain. Cool. Microsoft. So Microsoft at lower levels though, low 200s is what I'm really watching for Microsoft. All right. Let's see here. So let's see the poll. Let's see. Okay. So 40%. Okay. So 40% believe we're going to get down to 250. Make sure that you do vote. We've got over 721 people watching, so we should have a good data set. But 250 people, or no, $250 is the consensus right now, 40%. It's very close, actually, 37%. I didn't expect, wow, so we're actually very, very close. I didn't expect it to be this close. I was expecting like $200 to be completely ruled out or something. But yeah, it's very close between 200 and 250 as the lowest price that Tesla gets down to. But yeah, so 200. So it's pretty much both of those, 41% for 250 and 36% for 200. But of course, 275. This 275, saying 275 would be like today would be the lowest it gets down to, and then we only go up from here. That would pretty much be the consensus there, and then of course down to 150, very, very low probability, right? Only 17%. So yeah, so interesting there, interesting poll. I've got a strike put at 190. I'm happy to wait. If I get assigned, great. If I don't, hey, I keep the full premium. So, but the other one I do end up getting assigned, but I'll start selling covered calls on that starting second week of October because that's when it expires. But that one's also a little bit lower in terms of strike, so I have time. I love it. So yeah, we'll see where Tesla ends up. It should be interesting. I'll take a screenshot of this poll, and we'll keep it. And we'll kind of circle back 6 months later, 3 months later, and we'll see, where we are versus where the polls were. So should be an interesting sentiment check there. Meta's under 40, 140. Yep, so down to 139.81, down another 2%. AMD's down another 2%. Amazon's down over 3%. So looks like we're just accelerating the selling pressure here. Nasdaq's down almost 2%. So yeah, what a day. What a day here. On the week, we've got the Nasdaq so far down over 5%. We only need to drop another 2.7%. That's almost 300 points to hit our June low. And the S&P on the week is down over 4% at the moment, 4.6, almost 5%. It only needs to drop another, I think, 50 points, 57 points, 1.5% to come down to its June lows. So that's where we are. And the volatility here, up 6%, 29. So 35 to 40 is what we're really watching to be a net buyer. That's one of our many macro technical indicators that I'm paying attention to. So you can actually download that. You can download that document if you want. You can take a screenshot of 11 signals that I'm watching. It should be available there. But let me see. I'll post a link to that video if you haven't watched already. But those are the 11 signals I'm paying attention to before we actually start to become net buyers in this market. So that's the video if anybody wants to check out. Connor Black, thank you for the great comments. He says, you are by far the best channel on YouTube in this field. Thanks for the work, Caddy. Much appreciated from Texas. Shout out to Texas. Connor, thank you for that. I really appreciate it and glad you enjoy the content. And yes, as a community, we always strive to provide the best quality content. I will never compromise on that. So thank you. I appreciate that. Alex says, Caddy is slowing down and voice is getting lower. It must be time for him to sign off. No, not yet, not yet. I'm happy to be here. I mean, of course, the markets are selling off, so that's not what we want to see. But it's a good thing, right? Red is good. Opportunities are coming our way. So again, that's what matters most. And today is also potentially a great day to be selling puts. So again, you can come over to your options chain, whatever you use. You can look at different stocks here. For example, Google is something I'm interested in. Let's see. So puts at least a month out, 35 days. Let's see. We got $90 now, paying $1.80. That's a really good return about a month out, right? And the delta is 0.23. That's a little bit high. I look for usually under 0.20. So might even lower my strike to $89. That's still really good premium, $1.65. So if you do the math there, 87.35. That's about a 1.88% return in the next 35 days. I look for 2%, but I'm willing to, just let it be for 1 point. I'm sure if I go with 90, I'm going to be able to get 2% on that strike put. But that, again, I'm going to be paying a little bit of a higher delta there, or receiving a higher delta. So really would come down to the delta itself, and the premiums are good. And then we can also look at AMD. AMD I think is also going to be very good in terms of those premiums, at least 30 days out. So 35 days, $60, we're looking at 186. That's almost, I want to say, like 3%, 3.5% return on collateral. $55. That is a big jump down to 90 cents. So, yeah, 90 cents for $55 strike. Nvidia, I do have one, but I want to potentially sell even another one. I would be looking at $100 strike though. It'll be a lot lower. So looking at, let's see, December puts here, $100, $475. So that I think is going to be over 5%. So 100 minus 475, 95.25. That's going to be almost 5% return over the next 3 months, which is not bad. You analyze that, that's over 15%. So Nvidia $100 puts, something to consider. That's something I will. Delta is perfect, negative 0.199, so under 0.2. So that's that. And then Tesla might be very good premiums right now. Let's see here. So 35 days out, October 28th. 220, 455, not bad. 200 is 240. But of course, the farther you go out, the better the premiums will be. Wow. The NASDAQ hitting a new low of day. Just absolutely no buying pressure. We got no candles, no green candles. So Square, I will be doing a separate video on. Absolutely. So I will definitely do a video because I know Square's been selling off quite a bit. It's coming down to very attractive levels. In fact, it's under $55 now. So breaking down below support, hitting a new 52-week lows. I'll see if I can do a video on Square over the weekend and kind of update you guys on where that fair value might end up being. The only problem is that Square has a very inconsistent earnings. So if you come over to the income statement, if you take a look at the quarterly earnings, we've been positive, then we ended up being negative. And of course, another thing is the margins are really low because the Bitcoin revenue is predominantly what's driving the company's sales. I mean, 17 billion, 9 billion, they're able to do that because of Bitcoin revenue. So the margins on Bitcoin is really, really low. So if you take a look at their overall margins, they're only making 0.94% in profit margin. So those are some issues with the lack of visibility that I might have on the future of what Square might be able to do. But I'll still do a video on them, see if I can actually update you guys on that. Smoke to the Wine says, Caddy, I'm all in on LEBU at $7. What do you think? Let's see here. So LEBU is 638. Really depends whether you took that as a trade or as an investment, because it's a levered ETF, so I would never recommend it as an investment because leveraged ETFs are only meant to be traded, especially day traded, but I know some people swing trade it. I swing trade it, so it's okay, but never for a long-term perspective, right? Because there's a lot of decay, there's a lot of fees, and there's a lot of volatility involved with those leverage ETFs. So be very careful. But if you are looking at only trading it, of course, there has to be a plan in place for trading it, right? Where's your stop loss, right? What's the idea behind taking that trade, right? Do you see a reversal pattern? Do you see like any particular idea there that you can take advantage of? That's question number one. But now if you're in a situation where you want to get out of that trade because you might be down, you want to salvage it, I would be looking at calls right away. I would be looking at $6.50, $7 calls. See if you can get anything. $7 you can still get 65 cents. So that's a little bit of premium that will allow you to salvage that position and get out as quickly as possible. If that is your goal, if your goal is not to hold. But you're only down about 9 to 10%. But LEBU obviously C says, I'm still holding my 5x leverage LBU trades. My margin is 3.8. Yeah, be very careful, Steve, with leverage trades, man, especially in this market. That's why I personally have never used leverage, never used margin. Of course, traded leveraged products, but never traded with margin. Because if you combine margin with leverage, that can be a very, very disastrous strategy. So be very careful. It's only meant for people who absolutely know what they're doing, and of course understand all the risks associated with these. Especially in this market environment, right? If we were in an environment where the Fed was lowering rates and QE was happening and everything was going to the moon, so then it would not have been a problem. But right now, it's definitely be careful. So, all right, everyone. So Alexa says, "Wow, I think my comment made Caddy stay here longer. Great." Well, I was just about to sign off. But thank you so much, everybody, for staying. I really appreciate it. And the market's obviously not looking super pretty, but so far Tesla's low for the day, 274.77. So we'll see where we end up with this poll. Right now, still have 41%, over 40% people expecting Tesla's lowest point will be 250, and 34% expecting lowest point to be about $200. So I'll just take a quick screenshot. We'll kind of recircle back to this maybe 3 months, 6 months later. We'll see where we are. So once again, thank you so much for watching. Brian, streaming the Fed. Again, Jerome Powell is only going to be giving the opening remarks for 5 minutes, if I'm not mistaken. So I don't think that's going to be relevant for the markets. But if there's anything interesting, I'll share the links in our Discord. So thanks again. Hope you all have a great day and a great weekend. And also make sure that you drop a like and subscribe to the channel if you're just joining us for the first time. And link to our Patreon Discord is going to be down in the description if you want to join and, of course, be a part of our money investing community. So have a great day. Happy investing, and I'll see you guys in the next live stream. Take care.